Welcome to Getting Real. This is our show where we talk about getting real estate, real strategies, real stories, and cutting through the noise to get you what you need to be successful. So, what if you could grow your wealth, still have access to your money, and stop relying on banks? That sounds crazy, right? Well, today we're going to talk about a money strategy that could change everything for you. I'm super excited to introduce you to Hannah Kesler from the Money Multiplier. She's an expert in infinite banking. It's a strategy that flips the script on traditional banking and helps you build real wealth on your terms. She's here to break it all down so you can stop losing money to banks and start making your money work for you. It is a strategy that will blow your mind. I remember when I first heard it, like, what? It is such a paradigm shift from anything we were taught. But this is what the big banks use, what the families like the Rockefellers and others have used to maintain wealth for generations. And this is now something that you can have access to. So by the end of the episode, you will know how to become your own bank and why the wealthy have been using this strategy for decades. So get ready, because this might just be the money wake-up call you didn't know you needed. All right. So welcome, Hannah. I am so happy that you are here. Thanks for being on the show.
Thank you. And that was a beautiful introduction because, yes, it all starts with how you think about your money. I know that's what you talk a whole lot about, is just mindsets around money.
Yeah, it's totally true. So tell me, how did you get into this? What led you to the Money Multiplier?
Yeah. So, it's kind of a long story, but long story short, I am second generation into this concept that's called the infinite banking concept. My company is the Money Multiplier. So we just sometimes call it the Money Multiplier method. But all it is that we are just educating people about how to become their own banker, how to take back the control of their financial life. But that's just what I'm up to right now. All right. I'm only 25 years old. As of right now, 2025, I'll be 26 this year. And so even prior to that, I got to give all the thanks to my father, who has really taught the kids about this concept. So I'm second generation into this stuff, but my family started this back in 2008. I was 8 years old at the time. And Pops, first, when he learned about this in 2006, he received the information. He thought it was too good to be true, so never acted upon it. Then 2 years later, 2008, that's when he took action because he was a chiropractor, and a lot of his chiropractic colleagues were coming up to him hooting and hollering about this banking concept. And Dad was like, okay, I think I kind of missed the train here. I got to see what this is all about again. So that's when my family took action, was back in 2008. But ever since then, I'll tell you, I have loved teaching. I love numbers. I love math. I love helping people. And I was actually going to school for a little bit. I was thinking I wanted to be a CPA, but I was like, yeah, that's not for me. A little bit too boring, right? So I didn't go the route of the CPA. But then my real passion lies with wanting to get into fashion design, own my own boutique at some point in my life. So then I was kind of looking down that realm of, hey, well, what if I want to be a fashion designer? And then that's when it hit me. Oh my gosh, I'm going to go to this school. I was looking at Savannah College of Art and Design at the time. And the SCAD was going to cost me almost $200,000. Well, why would I go to a 4-year university, rack up $200,000 in debt, and then when I'm done with university, I will go and find myself like a $45,000, $50,000 a year job? That's not making sense. I'm kind of working backwards in that way. So that's when Pops called me up one day. I was actually a waitress at Cracker Barrel when he called me up, and he says, hey, I need help in my business. And if you're not going to help me, I'll go find someone. I was like, all right, well, what do you want me to do? So that's where I really started at. I would even just say like kind of like the bottom, the applications, processing all the applications, working with the insurance companies. I think that was the best place of where I started to understand this business, just because I really understand how these underwriters, the insurance companies think. And then from there, it kind of progressed. I was a dad's assistant. I was traveling around the country with him as he was teaching on live stages, doing podcasts and different things. And I was his tech girl. So I was there in the room. I was hearing all the conversations, seeing what the questions are that people were asking. I learned a lot from that, and to the point that, hey, Dad, I'm doing this myself. I'm going around stages teaching. I'm actually doing television appearances now. And it's just been a lifestyle. This whole concept that we teach, I love it so much about what I do, because I just tell people what I do in my own personal daily life. And then from there, we just expand together more and more as time goes on. So as of current, I do have a new book out. It's called The Single Millionaire Chick, and how I've been able to get on a lot of these television appearances is really branding that name, The Single Millionaire Chick. So we'll kind of see where that takes me in my youthful years right now.
Awesome. Well, we'll put a link to that book in the comment and the notes. So before we get into it, I mean, what the heck is infinite banking? Can you explain for those who aren't familiar with this? What is it and how does it work?
Yes. So infinite banking. The infinite banking concept, sometimes you'll hear me refer to it as IBC, infinite banking concept. But what it is, this whole concept's pioneered from a book called Becoming Your Own Banker by R. Nelson Nash. So that's my first advice, y'all, is that if this is the first time that you're ever hearing about IBC, the infinite banking concept, you need to know that book, Becoming Your Own Banker, R. Nelson Nash. It's on Amazon. It also comes in audio format. So if you got ADD like myself, you can go get the audio versions. But what it is, it's you reclaiming the banking function in your life. What we're doing is we're utilizing a specially engineered whole life insurance policy. And this whole life insurance policy needs to be designed specifically so that it has immediate access to high cash value. And my definition of immediately is within 30 days. So this whole concept just talks about, hey, we have to store our money somewhere. And what have we been taught up to this point in my life? Well, when I go make money, I go leave it at the local bank because that's where they just keep the money at. And then what these bankers do is that they lend out our money and they make a good living off of our money. But hey, I'm doing all of this stuff in my life anyways. I'm buying houses, I'm buying cars, I'm doing home remodels, I'm using credit cards. Why am I sending out all of this interest payments to the bank? Why can't I just flip the script and me be my own banker in my own life? And so that's really what it is. It's just the product itself, the vehicle, is a whole life policy. You got to make sure it's designed properly for this concept, but it's more specifically talking about the process of how we are being our own bankers in our life. Because last thing I'll say, Monique, I'm going to throw it back to you, but people don't understand that we finance every single thing that we buy. You either give up the interest that you could have earned on the money, aka paying cash for things, or you pay out the interest to somebody else, bank financing it. Well, how about I close the gap? I don't want to lose out on the future earning rights and the interest that I can earn on this money forever and ever. And without going too deep down a rabbit hole, this is just one of my personal favorite reasons of why I personally practice this. But it talks all about the opportunity cost of your money. Because when I just add this additional step of me flowing my money through the policy first, why I do that, there's a whole bunch of other reasons. But if I have my investor glasses on, the whole reason of why I run my money through the policies first is because once my dollar hits the policy, now starts that time clock of the uninterrupted compounding interest that I am able to earn on that money for the rest of my life. That's what opportunity cost is, uninterrupted compounding interest. So all that I do is I just run the money through the policy first, and then before I go make any transaction or investment, then I'll take it out of my policy, because now I'm double dipping on my money. I'm making interest inside of my policy, and I'm making interest over here in my investment deal. I just sum it up and say I'm double dipping.
I love that. So, my big takeaway with infinite banking and why it works, like traditional banking keeps you in this cycle of debt and paying interest to other people. Infinite banking helps you flip the system in your favor. And it sounds crazy and might sound like some finance bro magic trick, but I promise it's a real thing. I have one of these, and it is something wealthy people have been doing forever. So why would you say you think people should stop thinking like a customer and start thinking like a bank? How does infinite banking allow people to take back control of their finances?
Yes. Yeah. And actually, Monique, too, one point that you said there as well, that is 100% true, where this concept's not new. It's not on trial. It's not being tested. I mean, this concept's been around even longer than our tax code's been here. Our tax code's only been here since 1913. A whole life policy has been around since the late 1800s. So this is why all of these elite and wealthy families have been using it for generations and decades, right? The Rockefellers, the Rothschilds, the Morgan Stanleys, Barclays, they all get money. They all understand how to keep it in the family. And this is one of their pillars of wealth, if you almost want to call it that, of what they're doing to keep that money in the family. So to answer your question, though, really what it is that banking is a process, okay? And I'll even say this first. My mentor, R. Nelson Nash, he teaches us that we want to be in two businesses in our lifetime. The first business is the one that you're passionate about, gets you up out of bed every day, supports the family, supports the income. But then the second business is your banking business, the business that finances everything throughout your life. And that's what I'm here talking about, is that banking business. So why you need to start thinking like a consumer, or I should say as a banker and not a consumer, is because these banks, if you truly study banks, what they do is they take our money and then they lend it out to you or to other people. Because houses, you want to buy a car, you want to send the kids to college, right? These bankers, they use our money. And anytime that we make a deposit into the bank, that deposit to the bank is now a liability because they got to pay us interest on it. So how that banker turns that liability into an asset is a form of a loan. They loan that money back out to you to go and make that purchase of what you're trying to do. So you really got to start thinking that loans are assets to you. And I know my folks in the real estate space, you really get that. You understand how to leverage good debt. But let's be real, the masses just don't think like that. It's a lot of training to reprogram that thinking that we've been taught.
Yeah, for sure. Because a lot of us are taught, right? An asset is like your house, it's your car, it's this thing. But when you know that an asset is something that puts money into your pocket, and a liability is something that takes money out of your pocket. So something that's making you money is an asset. And so if you're paying on your mortgage and that's the liability you're paying out. But if it's going through this account that's making you money, that's an asset. So how can infinite banking be used to for real estate, to fund deals, create liquidity, scale investments?
Yes, yeah. A whole bunch of different reasons. I'll start here though, because this is what I like to do. I'm a lender in the real estate space. That's just what I'm into. Invest in the things that you like, know, and understand. I think we've all heard that before, but I understand it. Monique, let me even take you back further than that. Because before I started doing lending to other people outside of my family, my father came to myself, my two brothers, and he says, "Hey guys, how about you lend me your money? Give me your money. I'm going to pay you 10% on it. And it's guaranteed. It's with me, the bank of dad. And every month he would pay us those interest payments." So that's really what got me into the world of understanding how to go put my money to work for me even harder. So from there, what dad would do is when he would take our money, he would pay us 10% on it. He would love that, because then what he would do with our money is he would go and give it to other lenders where he's making no less than 12% on the money, right? Because dad was smart. He wanted to use that borrowed money, go make more on. So it really got me to understand how to go make my money work for me. Now, when it comes to utilizing my policies with the lending, what I do is I always funnel my money through my policy first. And then let's say that a guy named Jonah, just making up a name. Jonah calls me up and he says, "Hey, Hannah, I need $50,000 because I'm about to go do a renovation on this property." Okay, I'll loan you the $50,000. I take the $50,000 out directly from my policy in a form of a loan. Okay, here's the biggest thing. I'm not withdrawing the money out of my policy. I'm taking it out in a form of a loan. Reason being, how we kind of almost talked about, is that when I loan the money out of my policy, now I'm not interrupting the interest that I'm earning on that money. Because here's logistically what's going on. When I call into the insurance company and I say, "Hey, I want to take out this $50,000 I have in cash value." Number one, they never ask you what you're using the money for, when you're going to pay it back, or how you're going to pay it back. Because honestly, they don't care. A loan on the policy is nothing more than a prepayment of the death benefit. So that's why the insurance company doesn't care, because they know in the end, you have a guaranteed expiration date, what I like to call your graduation date. So at the time of your passing, any outstanding loans is just going to get subtracted from the death benefit. And then whatever remaining portion that's left of that death benefit, that's what's going to get paid out lump sum tax free to your beneficiaries. So that's why I take out loans. You can take out loans or you can withdraw the money out of the policy, but I don't like taking withdrawals. I want to take out loans because now when I take a loan of $50,000, I put my policy, my death benefit up for collateral, and then I'm borrowing from the general funds of the insurance company. So in the real world, I'm using their $50,000, and that's how and why my $50,000 still sat in the policy to grow and compound as if it wasn't even touched. I think that's the coolest thing since sliced bread, if you ask me, but maybe I'm just a little biased, but I just don't know any other vehicle on the planet that allows you to save and spend at the same time. And y'all, if you guys know of something, please tell me. I mean, my family's been looking since 2008 for something better. We haven't found it yet, but I'm always open, always listening to other people and what they're doing. So that's how I do it in my lending. I just do it straight like that, take the cash value out, go give it to Jonah, go do the renovation. And then every month when he's paying me back those interest checks, I use a portion of that, pay my monthly expenses. The rest that I'm not using, I don't keep it down at the bank. I don't like to keep money at the bank. I don't think my money's protected. If you really think your money's backed up by the FDIC, we got to have a come to Jesus meeting right now, if I'm being real with you. So instead, I move that money back inside of my policies. So that's one way. There's some folks, they'll use HELOC money. People will literally use home equity lines of credit, dump it into the policy if it makes sense, and then go and lend it out. That's another way people are doing it. Hey, if I need $30,000 for a down payment on a property that I'm about to go purchase, hey, I'm going to borrow the cash from my policies to then go make that purchase. It doesn't matter what it is, because literally the cash value can be used for anything. Go buy a pack of chewing gum down at the convenience store with your policy money if you really wanted to. You can. So it's just adding the additional step is really what I want y'all to get. That I don't want you to change anything that you're already doing with your strategies, your goals, your investments. It's just adding the one additional step of where the money goes first. Wait, real quick, Monique, I think you're muted.
That sure was. Thank you. So I wanted to ask you, what are some of the biggest myths or misconceptions about infinite banking that you'd like to clear up?
Ooh, yeah, that's funny. Literally, the podcast that I did just for my channel, this was the exact same topic that we were talking about today. Because I had a thought, okay? So I have my best thoughts when I'm in the shower, obviously. And I was just thinking about how people put so much negative reputation on whole life insurance when it offers such great benefits and value. So it just kind of got me thinking about the noise and what people are hearing on the internet and other things. So here's number one. You know how Dave Ramsey, Susie Orman tell you that whole life insurance is the worst place to put your money? I get it, because my dad was a Dave Ramsey's baby step follower. He was a buy term and invest the difference guy. I get where that mentality comes from. But what I don't love, because I have a belief that there's no one silver bullet out there for everybody. Yeah, maybe buy term and invest the difference is good for you. Maybe an IUL policy is good for you if you understand all the moving mechanics inside of it. If you go down the rabbit hole of infinite banking, you'll be introduced to IULs, okay? Index Universal Lives. But what these gurus and the people who are speaking to the masses, they're not explaining the full story. I almost think about it like this. If I like Dave Ramsey, and I'm just picking on Dave right now. I think he's a great, phenomenal guy. He's got a lot of great mentalities there for the person that's trying to learn to budget, learn good habits, living below your means, saving. That is good. And everybody needs to have those habits and discipline at the bottom scale. And that's where I like the buy term and invest the difference, because he's teaching us those good habits. He's also teaching us the importance of insurability in life insurance. I'll get to that one next. But he's teaching us the importance of life insurance. But then here's the thing though, buy term and invest the difference. Are the people really out there investing the difference? I don't think so. And even if they are investing the difference, are you calculating in all of the fees and the wealth transfer that you are doing with your financial advisor by working with him? So they're just apples and oranges. You know what I mean? So that's a big misconception is that whole life is the worst place to invest my money, because it's not an investment. It's a savings. I'm getting a little passionate here, but it really irks me when people say, hey, I don't want to go and invest in a whole life policy because the rates are too low. That's another misconception. Hey, why would I put my money into a stupid, boring, guaranteed 4% policy when I got borrowers lined up over here that are willing to pay me 12% to use my money? That doesn't make sense. So they're not understanding that this is just a place of where we save, we warehouse house the money. And then through the policy is how I will go buy that investment. Because investment, in my definition, it involves risk. Risk meaning that it can go up in value and it can go down and lose value. The whole life policy can never lose value. It's an appreciating asset and it's guaranteed interest no matter what's going on in the economy, who is pissing off who in the world. It don't matter because I got guaranteed interest rates in that policy all day long. So that's number two. My last thing that I'll say is that, hey, I don't need this because I'm self-insured. I hate that one. I'll just be real. Because think about it. If you go and you pay off your house, would you stop your homeowner's insurance on your house? No, you wouldn't do that. You keep the insurance on the house, right? So why would you do that for yourself, you being your number one asset, right? You are your number one asset because you and your ability to produce income and support for your family, you are your number one asset. And why are you neglecting you in that asset? I don't know. Wait, Monick muted.
I keep doing that. Sorry. I'm so excited. So if someone wants to get started with infinite banking strategy, what are the first steps they should take?
Yeah. Here's number one. Assess your budget. What are you doing? What's the cash flow looking like? You know, income that's coming into the family. It can be personal. Maybe you are a business owner, but assess your finances. Understand the money that comes in, all my forms of income, how much is coming in. Then look at where's all my money going? Where am I spending all of this at? I love an app that's called Rocket Money. I plug Rocket Money all the time. Rocket Money should just sponsor me at this point. Shout out. But I love that app because it really tracks my spending on my personal side without having to go in there and do all the manual labor on it. But the most exciting part about that app is it actually tells me how much I keep. Because it doesn't matter how much you make, it only matters how much you keep. And that keeping bucket, that's the money that I start to flow through my policy. So for instance, if you're the type of person, let's just make believe you're making $10,000 a month and your expenses are $7,000 a month. Well, why am I leaving that leftover $3 down at the local bank? And the bankers are the ones who's making all this profits off of me. I want to start by shifting that into keeping the savings money. That should be the dollars that start to flow through my policy. So understand your cash flow would be number one. Number two, you should read Nelson Nash's book, or you could go to our website, themoneymultiplier.com/presentation, and start there, because that will really get into the weeds of, well, why do I want to do this? How are we doing it? What even is this infinite banking concept? So read Nelson's book or watch that presentation. And then from there, hop on a strategy call with somebody on my team, a money mentor. Heck, maybe you don't like me or like my vibe. That's okay. At least go with somebody who is an infinite banking concepts practitioner. And how you can find that is if you go to infinitebanking.org, there's a practitioner's finder on there, and you can see maybe somebody that's local to you in your area. So I don't care who it is, but just work with someone who is an IBC practitioner if you are wanting to go down this whole rabbit hole and start the journey. Because I'll just say, being second generation into this, I have never had to go to the bank to ask to borrow money. I've always borrowed money from the bank of dad. And if some of my parents are listening right now, I'm going to just share real quick how powerful this concept can really be. Because within the Kesler family banking system, we have over 38 policies. And what is happening right now is we, the kids, borrow from the family bank. And for instance, like this condo that I just bought. I bought this condo because actually I won my podcast studio in my house. I was kind of tired of going back from my office view to my podcast view. So I bought this condo, and this condo was a little over $950,000. I had enough to pay my down payment within my policies, but I didn't have enough for the rest of it. So I went to the family bank and I said, hey, I want to borrow money from the family bank. The family bank charges me 13% interest. I know some people are like, oh my gosh, that's so much interest. I won't get deep into that right now, but here's what's going on. We are tracking out of the kids who is paying the interest back to the family bank and how much interest that they're paying. Because what's going to happen is when my mom and my dad pass away, there's going to be this death benefit money here. Honestly, right now, if they pass at the age of 65, there's going to be a death benefit bucket of $32 million. So what's going to happen is that death benefit is going to pay out the kids' interest that they paid over the course of mom and dad's lifetime. For example, I'm going to use easy numbers. Let's say that I paid back $300,000 of interest over dad's lifetime. My younger brother, he paid back $200,000 of interest. And let's say my older brother, he paid back $500,000 of interest. Zach paid 2, Hannah paid 3, Sean paid 5. So that's a total of $1 million. So let's say that dad, at the time of his passing, he has $1.5 million of death benefit, just making up numbers. So what's going to happen is of that 1.5 death benefit, 300 is going to go back to Hannah, 200 is going to go back to Zach, and 500 is going to go back to Sean. And then whatever's remaining, that leftover, that's going to get split out 3 ways equally to all of the children. It's just how we're keeping money in the family.
That's incredible. All right. Well, y'all, I think just in summary is you definitely want to get educated about this. It's a real big paradigm shift, and it takes a while to fully understand it. So you go, we'll put the link for the presentation as well as for the book. So either read the book or watch the presentation. I think it's about an hour and a half, hours. Yes. It's well worth your time because you want to understand this. And then from there, you'll want to take action. So thank you, Hannah. That's incredible. So before we end, we always end our show with a Trinity, which is a brag, a gratitude, and a desire. So what is your brag? What's one thing you are celebrating right now?
Ooh, one thing I'm celebrating, honestly, these television appearances. It's so cool being invited on ABC, NBC, CBS, and traveling around talking about my new book, The Single Millionaire Chick. So I would say brag is that. And then also my children's book that's coming out here soon. I'm kind of excited about that one.
Well, brag. First of all, in the book, that's incredible.
Thank you.
The book B, the book that's coming. So amazing. I think so many people want to write a book. So few people do. So congrats on that. What is one thing that you're grateful for?
Oh, yes. Grateful for? Honestly, being able to have time freedom. This morning, I woke up and I was like, I really don't want to sit in front of my computer today. I went on an hour-long bike ride on the beach, and it's because I was able to control my calendar. And I think that's the best thing that I'm grateful for is just being able to control my time in my day and how I want to spend it.
Love that. Freedom is everything. And last but not least, your desire. What's one desire you have for yourself, for others?
Yeah. I think my desire, honestly, this year, I want people to start taking back the control of their life. I think a lot of people are in this shift ever since the COVID time of, oh my gosh, I was getting up every single day, going to work, working this 9 to 5. I'm not spending time with my kids because I'm tired. I just don't want to do anything at the end of the day. So I really challenge people to start having that freedom of the control over their lives. I really want that desire to be, because I talk to a lot of people in a day, and it just breaks my heart. I was in tears one time. This one guy, just because he just felt like he was a failure, because he's like, I just can't believe that I'm here at my life right now at 50 plus years old, and I don't have anything to show for it. I'm working 14 plus hours a week, and all I want to do is spend time with my 3 kids, but I can't because I got to keep a roof over their head. So it's just that desire to live the life and control the life that you want. That isn't that the whole reason that we're here having this human experience anyways, So that's just why I have a big passion about money, because money is just, it's a tool, it's a resource to be able to get me to that place. I'll leave you with this quote. Money doesn't buy happiness, but bad stewardship of money can steal happiness. And I think about that a lot.
For sure. Awesome. Well, I hope so shall your desire be, or so much better than you can imagine. Thank you for that quote. Thank you for coming. Thank you for your awesome energy always. And so for everybody listening, definitely check out the moneymultiplier.com and Hannah Kesler. What is your podcast?
Yeah, the Money Multiplier podcast.
And the Money Multiplier podcast. Find out more. You definitely want to get in on this. This is next level stuff, y'all. All right. See you next time. Another episode. Thank you. Bye.